But time to put the spotlight then on FMCG. What is the outlook when it comes to rural growth slowing down, inflation woes, as well as who is going to be some of the key beneficiaries down the line? Abneesh Roy, who tracks the sector very closely, now joins in from Nuvama Institutional Equities. Thanks so much for taking time out and joining in. I'll start off with the latest news that we had just yesterday that companies, a lot of these FMCG companies, have undertaken a grammage increase in order to pass on the raw material price benefits. How are you looking at that, allowing them to help in volume recovery?
Sure, thanks for having me. So yes, it's a positive development. We see this as two reasons. One, of course, local players in select FMCG categories have been an issue last 2 quarters, and we always see pan-India players, eventually they get back that market share. So we would see the grammage addition, the price promotions, the cross subsidization of the lower end by the higher end by the big companies. That is leading to a fight back against the local players. So we have seen that earlier in tea, the lower end detergent, biscuits, edible oils. We have seen this issue that local players have taken some market share, but eventually the large players win back that market share. So we see that in next 2 quarters, the local player issue will go away. Second, of course, yes, rural volumes have been disappointing in our view. Q3, you will see most of the companies see flat to low single-digit volume growth in the rural, while urban will be growing faster. Even Q4, we don't see a big recovery in rural currently. Our sense is the recovery will happen in FY25 based on the 1 lakh crore kind of election spending, government stimulus, freebies, etc. In terms of the acreage, also in terms of the Kharif and Rabi, it seems to be going the right way. The only thing which is needed for next year is no El Nino. We have analyzed the last 20 years data. So two back-to-back El Nino years are a bit rare. So if the monsoon is normal, we'll see the rural recovery start in FY25. Currently, our topics for this results will be essentially United Breweries, Nestle, Bajaj Consumer, Tata Consumer, and Dabur also saw good performance. The weak performance are essentially from Marico, Imami, ITC, Britannia, etc. And mid-tier performance will be from the rest of the companies like Hindustan Unilever, Colgate, United Spirits, etc. So currently, we'll be a bit cautious in terms of the rural demand.
Abneesh, the other thing I also wanted to understand, it being an election year, there is, of course, that vote in account and then the budget as well thereafter post-elections. Do you see higher government spend and maybe that could aid rural recovery much more meaningfully?
Yes, I would expect that. Already, if you see Narega, the budget outlay has been breached and government is giving more support. So that's a positive thing. We also saw that the free food subsidy for almost 80 crore Indians, that has been extended by 5 years. We also saw that now the cooking gas and the diesel and fertilizer subsidies have been increased in most states and even by the central government. So yes, definitely government is taking a lot of actions to overcome and to help the farmer. Definitely in terms of the El Nino, that was the spoiler. We saw some green shoots in Q1 FY24, but that got negated because of monsoon deficit in UP, Bihar, etc. And there were floodings in some of the other areas. So that has been the issue. The other issue has been inflation in medical, education, telecom bills for the farmer. That is taking away some money from FMCG lower end. The higher end, it's not a problem, but the lower end, the inflation in education, medicine, and telecom bills, etc., is leading to more outlay there.
Fair enough. What's the outlook then in terms of the budget, and in terms of, apart from that, just talking about, regional players as well, because they continue to dominate. Do you think that the competition will continue to remain fairly stiff?
Yes, local player competition will continue in Q3, Q4 in segments like biscuits, lower end detergent, edible oil, tea to an extent. But after that, what will happen is the national players will win back that market share in FY25. We always see this happening. So last year, the local players' gross margins were very low because of high inflation. And when the deflation in key raw materials happened, they had more ability to spend on advertising, spend on promotions. So this is a temporary effect. In terms of the budget, this time ITC, we don't see much of an issue because February budget will be a non-event. The real budget will happen post-election. But ITC December quarter will be soft because last year ITC's cigarette volumes were 5% quarter on quarter higher because of the budget expectation of a tax increase, which eventually was very mild. But this time the budget will be post elections in July, August. So that's why ITC, the weak volumes will be there in Q3, which we expect in Q4, slight recovery. So this is how we see in terms of the budget impact.
Particular, if I have to delve deeper into Abneesh, what can be anticipated from volume recovery? What is it that you're penciling in for what this quarter is going to report, and what's the visibility now going forward across categories and companies?
Sure. What we are seeing is the segment which is doing well in December quarter and possibly even March quarter will be beer segment. So United Breweries, we expect high single-digit volume growth in Q3. This is higher than most other FMCG volume growth. Even United Spirits, our senses, the P&A volume growth will be 3-4%, while the popular will see a double-digit volume decline. So beer seems to be growing faster. There's a market share gain for United Breweries also. So that is one thing which is there. Otherwise, in terms of the updates which have come in terms of Marico, Colgate, Dabur, Godrej, etc., we like the update from Dabur. They have seen good international business growth, even in India, except the winter care portfolio because winter was mild. Rest of the portfolio for Dabur has done well. But Marico, if you see, because of the hair oil, local players slow down, higher competition from Dabur and Bajaj Consumer also. Coconut hair oil has been a bit weak. Vaho also has been weak and Saffola also weak. Plus for Marico, international business has also now slowed down to a 5% kind of a growth. So our top picks will be essentially United Breweries, Nestle, Bajaj Consumer, Tata Consumer, and Dabur. From a Q3 results perspective, Bajaj Consumer and Indigo Paints, these two small companies will see good numbers in December quarter. Bajaj Consumer, because of the festival-related benefit in Maharashtra, and Indigo Paints is taking a lot of proactive steps going into waterproofing, expanding feet on street, etc. So these two companies will see good numbers in December quarter results.
I know you spoke of those individual categories, but what about food in particular? How do you see like the QSR plays and some of these platforms as well performing? Food tech as well, if you would like to share?
Yes, good question. So in fact, QSR slowdown started last year in December quarter. So initial expectation was that because of base effect, the December quarter results should be a improvement in terms of trend. Unfortunately, that has not happened. So we are still seeing that the same store sales growth for a lot of the QSR will be a low single digit kind of a number, which is not very different than earlier. In spite of World Cup being there in December quarter, in spite of base effect now catching up from a positive aspect, we are not seeing that because there is more competition between the QSR. There is a lot of expansion by each QSR, and definitely consumer is going beyond QSR and sampling other kind of formats also. So that is the reason why we continue to see very limited same-store sales growth recovery for QSR. Slight gross margin expansion will happen because milk cost has cooled down. But because of lack of operating leverage, EBITDA margin expansion will be fairly limited. So in retail, we continue to remain positive on trend. We saw very good numbers by Titan. So that is something which we continue to like. So these are the two names which will see good numbers, and in spite of valuations being rich, we'll see the compounding effect in Titan and Trend.
Abneesh, can't help but talk to you about Z. The saga continues, and now reports are indicating, source base of course, that the deal is called off with Sony.
Yes, it remains a saga even after 2 years. Only two things I would like to say on that. One is these kind of news articles have come earlier also. Then we see that the opposite thing happens. So investors of Z would want to have that kind of expectation. Currently, in our view, it's a 50-50 probability of deal happening or not happening. If the deal doesn't happen, it is negative for both Z and Sony because individually their market share will be too small, especially given Disney and Reliance Industries are coming together and they'll become very large in terms of market share. So Z and Sony, it is imperative that they go ahead. Otherwise, they'll become irrelevant in the next few years. Z stock has come down sharply today. This was expected given the news flow which happened. But definitely, in our sense, the talks are still going on. And earlier also the news articles have come and then nothing happened. But definitely the delays are concerning. And in our view, the probability of deal happening or not happening has gone down because of so much of delay. In our view, this is not just a disconnect on CEO designation. I think there is more to it. There are some issues which seem to be still unresolved. So those are the issues and clarity which are still awaited. If the deal doesn't happen, there could be more pressure on Z stock because of the reason which I mentioned, that Reliance and Star are coming together and they'll become a very dominant player. So if the deal happens, this stock could definitely re-rate to 350 plus also very soon because all the approvals have come. So it's a 0-1 event, but it's very unfortunate that after approvals also, there is so much of a disconnect between the two players and both are going to see a win-win if the deal happens. But definitely currently it's a 50-50 probability in my view.
Okay, that will spell trouble for Z Entertainment and Sony. Thanks so much for giving us your insights on FMCG as well as touching upon media, given that it's a very pressing issue and the stock is reacting. Good to have you on board. All right, let's shift gears then.